From the trading desk of dailyforex.com, this is Christopher Lewis looking at the dollar yen pair for April 30th. As you can see, I have the daily chart plotted in front of you, and as you look at the technical bits of the chart, you can see that the 80 level I have drawn in a thick line. I also have a Fibonacci retracement tool drawn from the low to the high and the 200-day moving average. The reason for the 80 line being drawn out in a thick manner like that is when I switch to the weekly, you can see clearly that it was support previously as well as resistance. A couple of these weekly candles were intervention candles by the Bank of Japan. So the fact that we were able to leapfrog the 80 level truly was a significant event. Going back to the daily, you can see that the Friday candle was very bearish, and in fact we do have a little bit of a downtrending channel that looks like it is running straight to the 80 level. This will make Monday a very interesting day. As part of the background, would be remiss not to mention the fact that the Bank of Japan has expanded its asset purchase program by 10 trillion yen to a total of 40 trillion. This, under normal circumstances, would weaken the yen, but the Federal Reserve Chairman Ben Bernanke mentioned that the Federal Reserve still has tools available to become accommodative if the economy does require this. Of course, the one thing that the traders forgot to ask, or at least didn't get the answer to, is what exactly would it take to see that? There is high probability that there will be a little bit of a bounce back by the dollar once people start to think about it. Having said all of that, we are at the 80. Roughly, we're about 26 pips above it, and coinciding with the 80 is the 50% retracement. The 200-day average, moving day average, is just below it. Now, something that I found interesting as well, and I will put this in a different color, in black, is the 52 exponential moving average. And when I draw up the weekly, you can see that it is just under the 80 as well. Now, why do I bring up the 52? Obviously, on a weekly chart, that is 1 year. That is the average for the year. We have come back down and we are starting to retest it. Another interesting spot. So, in this situation, I see that we have a very interesting confluence of things going off at one spot. I can't help but notice this and think that this is one of those times where you could look couple years down the road and saying, had I only got into the pair at this point. I could be proven wrong, and truthfully, it wouldn't surprise me. But the truth of the matter is I'm willing to buy supportive candles right around this level, and Monday could be very important in this pair. I will be buying bullish supportive action. I won't sell because below we're looking at Bank of Japan intervention somewhere below. But I would be interested in buying and holding. And I think if we can clear 85, this might be a trade that I'm in for several years, as it could be a massive trend change just waiting to happen.